watching our podcast, Real Estate Insider, where America goes for funding, your direct nationwide mortgage lender and broker for the last 20 years. Every week we come to you to talk about our different exciting different loan programs, what's going on in the market, real estate, the economy. Last night we did our live talk about the DSCR construction loans, and every time we have new information, we bring it out to you. So today we're talking about the 50-year mortgage program. It's a new program that's getting ready to get rolled out in the first quarter of 2026. So we wanted to be the first ones to talk about this because we're going to be implementing this new loan program and talk about some of the pros, the cons, the benefits of why you consider a 50-year mortgage, and if it makes sense, and comparing that to a 30-year mortgage and a 40-year loan to see if it actually does save you money. So we're going to talk about this because, obviously the biggest concern, the reason why this program is coming out is because, we're in an inflationary market, higher interest rates, higher home prices, and people are not able to get approved because of their debt to income ratio to qualify for a loan. So a lot of the, Wall Street banks, a lot of the politicians, policymakers are trying to come up with solutions, ideas on to create a longer amortized loan, which will therefore lower the monthly payment. So we're going to go through that today to see if it actually makes sense. So basically, the traditional loan is a 30-year mortgage, and that's what most loans are securitized by: Fannie Mae, Freddie Mac, Wall Street, all of the secondary market. There's even a 40-year private mortgage, and now there's going to be a 50-year securitized mortgage that will be trading as far as government loans, conventional, all of that stuff. So basically, the comparison, if you look at compared to a 30-year loan, a 40-year loan, a 50-year loan, and the one thing you have to understand is when you go with a longer amortized loan, the interest rate will be higher. So there will be some offset to that with respect to the monthly payment. So for example, if you do a 30-year loan at 6%, a 40-year loan at 6.5%, and a 50-year loan at 7%, and you're financing $1 million, the one thing to look at is, yes, you are going to have a cheaper payment on 50 years compared to 30, but you're paying 1% more on interest in the monthly payment and over the amortization of the loan. So if you can do the math on a calculator, you'll see that the interest payment is about 17% cheaper on a 50-year loan versus a 30-year loan. Okay, 17%. So what does that mean? That means if your payment on a 30-year fully amortized loan, this is assuming that you're borrowing $1 million, is $4,000 a month. That means that your payment on a 50-year loan will be about $3,400 a month. Okay. So your payment will be $600 cheaper per month. All right. And to some people, that's the difference between, doing the deal or not doing the deal, being able to pay their car note instead, or pay their kids' college, or whatever their other obligations are. And if that's the case, I do think that you need to consider, doing a 50-year loan, because you may not be in that house or on that loan for 50 years, but you still have a place to live and a roof over your head, and you could still potentially be building equity from the property that you live in. However, you're not going to be reducing the principal loan at the rate that you would at a 30-year. That's one thing you have to keep in mind. The other thing is you are paying more interest. That's obvious. If you do the math on $1 million loan at 6% and $1 million loan at 7% over a 30 and 50-year amortization, you're almost paying double on a 50-year. It's like 1.8 times greater than you are on a 30-year. Okay. So if your interest expense over 30 years, let's just say, is $3 million on a 30-year loan, it's like $4.8 million on a 50-year loan. So it's a massive difference on the amount of interest that you're going to pay. Now, obviously, you're not going to probably be on that loan for 30 or 50 years. Most people aren't. The average person is on their loan for 5 years. So I don't think the 50-year loan is a bad idea. It is going to have marginal savings, but it's not like your payment's going to be cut in half. So like you're not going from a $4,000 payment down to $2,000. You're going from $4,000 out to $3,400 on $1 million example. And again, it is savings. I'm not saying it's not, but there's also trade-offs, and you are going to be reducing your loan amount a lot slower. But if you're in a situation where that doesn't matter and it's all about cash flow today, which it is for most of us, then that's perfectly fine. We're going to offer both programs 30-year, 15, 10, 20, 40, 50. And if that's the most important thing, then that's what you need. That's what you need to rock with. So we want to be here to help you, with any of these different loan programs. That's why we're here, especially with this one, because we do think, and this, of course, I'm sure you're going to see interest only options. You're going to see, adjustable rate, interest only, 50-year amortization. So there's going to be a lot of different ways you can probably strategize to kind of work through this to even get even cheaper and lower payments. So I would expect that this is going to be available in March of 2026. It's not available right now. So they're working through it to be able to release it. Obviously, there's going to be probably a lot of mistakes, a lot of errors, a lot of issues. Programming all this into the software, into the different loan products like conventional, VA, FHA, Fannie Mae, Freddie Mac. So as soon as we start accepting applications for it, we'll let everybody know right away. In the meantime, you can lock in 30-year, you can lock in 40-year. Interest rates have dropped, so it's a great time to consider locking in to get pre-approved for your loan. So please don't be a stranger. Reach out to us if we can help you. Obviously, give us a call, text our office 832-431-6331. It's where America goes for funding. So don't forget we do commercial, hard money, bridge lending, construction loans. So if we can help you in any of that, please reach out. Also, our real estate university, if you want to get signed up for that, to get more information, how to become a top producer, a top closer with our company. We also have our Amazon royalty rewards program. If you're a customer, a vendor, a partner, don't forget to give us a 5-star review on Google. And we'll hook you up with that free Amazon gift card. And then also our loan partner program, you can get paid for referring customers and business over to us on our loan partnership program. Don't forget about that. So a lot of ways to benefit with our company. Please reach out if we can help you add any type of value. Give us a call, text my office, whatever we can do. 832-431-6331. Don't forget to give us a big thumbs up. Subscribe, like that bell, enable notifications. We really need all the help and support that we can get with the channel. So appreciate all of you guys tuning in and watching us today with Angelo Christian. Take care. Peace out. We'll see y'all again next week.